Welcome to Markets Now. I'm Michelle Rook along with Kevin Duling with KD Investors, and we are seeing mixed trade in both grain and livestock futures. In grain, specifically feed grains to the plus side, soybeans a bit lower here to start off this morning, and wheat is the price leader. Kevin, and let's talk about that. Basically, we saw a story kind of clear here that Cargill is not going to be exporting anymore out of Russia. That seems to be kind of driving the market this morning. What can you tell us about that?
Well, it's still early. We're trying to gather all the information on it, but my original take is this sounds like a move from Russia to gain more control over their export situation and have it less privatized. So by doing that, they're gonna if they can if they can get in control of every little piece of that, then they're going to be able to say we'll export to you or we won't export to you. They're as this war with the West continues, they've spoken that their goal's been to get more of their wheat to North Africa, and the nations that need it, they don't want their exports headed to Europe. And by starting to control the export sector as much as possible, I think that's what we're looking at here. That's my original take. Now it may change as we go through time. I don't think there's a little question on, did Cargill originate this, or did the Russian government originate this? I think it's the Russian government originating this because it also matches some rhetoric of wanting to search out and buy some of their own fleet of ships. So to me, it sounds like Russia's gearing up to control their exports as much as possible.
You bet. So, like I said, we're getting market reaction in the wheat market this morning. It's the price leader. Do you think that we need to put more war premium into that market? Are we putting weather premium in at the same time, or are the funds just covering their massively short position here?
I think yes to all. The protein complex, the hard red spring and the hard red winter, they've had different chart pattern than Chicago and the Paris, the native. And so you've got the hedge funds primarily in those soft wheats, and it's such a large position, it didn't make any sense at all to get that large of a position with the backdrop we have, but they did anyway because they could. And last week we had chatter about Russia controlling exports, and that was the first shot across the bow. Wasn't a direct hit. And then we come in today with the Cargill news, and so I guess it's adding war premium, so to speak. But
Right.
with the funds as short as they are, if something concrete happens, if something gets hit that shouldn't, or the ship, they're really trapped. I mean, they can't get out of that big of a position without a multi-dollar gain, and so. But yes, I mean, the hard red winter, I mean, definitely some premium being in there for that crop, and it just sounds worse every day.
Yeah.
The abandonment acres are going to be huge. Does rain at this point, does that give them a go on Milo, or is it just a complete zero for the year? I don't know.
So the wheat market obviously helping corn out to some degree, but we got more China business this morning. Do you think that we have enough push now in the export market? Are we going to recover enough there in terms of our sales? Is that going to be what pushes us through some of these overhead resistance areas we're now into on the corn, or what?
Hard to say. I feel like the higher we go, the less apt they are to keep buying. They've been buying, the last 40 cents up, they've bought just about every day. But you wonder if they're going to reach a point where they say it's too expensive and back off. And my whole theory is that we were going to trade sideways, not really break out of any big ranges until we get into the weather season. So I think that probably still remains. I don't, as far as total quantities, if they keep buying what they're buying, yeah, we're gonna ratchet things tighter, and much tighter than expected. But I would expect them to back off some if prices continue to rise.
No, that's a good point. They probably came in when we had this dip just because prices got low enough. We were competitive, and we're still probably have some of the cheapest corn in the world. Let's talk about acreage as well. Of course, we're looking for higher acreage in the report on Friday, but overall, do you think, what is the market trading right now? How much of that bearishness do we have already programmed in? Or because now we've had this rally, what does that mean here for Friday?
Well, that's a tough call. It's a big question. My thought all along has been, usually when you get a high price grain, everybody rushes in to raise that grain, and it collapses that market, and the other ones have low acreage. But we've had high prices in everything, and so
Right.
it's spread out the acreage. And so I question some of the real high numbers we see, and then there were some really low numbers that were floated around, and I question those as well. But I mean, you've still got high hay prices. You've got high, there used to be high grass seed prices at the time. There's so many competing products, high barley prices, that it's going to spread things out. So it's hard to see those big, eye-catching numbers in corn and soybeans. And then the wheat, Northern Plains wheat was, a lot of estimates at 11 million acres. But that, boy, looking at their snowpack, I guess, and their price, I don't see that even coming close. But so it's a tough call. At the end of the
Yeah.
day, I'd be happy to move on past that report. We'll see what growers actually do and see what the high inputs last fall did. I still question how much corn, if we're going to have those extra high acres in corn, we're at the high end of the estimates with as high as inputs were. So
Yeah.
to me, I don't know. I'm just going to graze across it and look forward to Monday.
Yeah, no
So,
doubt. And with what we're seeing for weather, it probably will be way different by the time we get the June acreage report out. Soybeans. So we've had a nice rebound here off of the lows. We're setting back just slightly here this morning. I'm not sure if we're going to, eventually have to follow corn and wheat as we go through the day here. But do you feel like maybe we've run up into a little chart resistance as well now on soybeans? Because I think we're up close to that 50% retracement level, or not?
yeah, that'd be a natural spot to kind of pause here for a bit. You had the big long with they were short wheat at the same time, and they've been scaling out of that. And you question how much demand we're going to get from here forward in old crop, new crop. It's too early, and so I think oh, I wouldn't be surprised to see just kind of a range bound back off a little bit. I don't see any reasons for soybeans to take off. There was a report earlier suggesting that maybe some Brazilian soybeans would be getting switched back to the U.S., which I don't know if that's capacity problems or what, but that would be supportive and that would goose us, but that's unconfirmed at the moment. So
Okay. Was that what helped us recover here the first, Monday and Tuesday, or not? Was that news out
I would
earlier?
guess so. I would guess that was part of it. Yes.
Yeah.
Sure.
Let's also talk just a little bit about the cattle market. We've had some of these banking concerns kind of ease now. And, do you think that's going to help cattle, maybe all of these markets stabilize a little bit here? Because we've had a lot of capital flow issues hitting the commodities sector and cattle in particular.
Correct. And I think you're just going to see kind of the ebb and flow pattern in this. I mean, the fundamental backdrop in cattle is great. I would expect another surge in prices and higher prices to go. But we're going to run into these macro deals. We're no way out of the woods on the macros, in my opinion. We'll see see what rates do. And they always talk rates like it's the last cut, but then they have to raise it again. And so I'm expecting some pretty big turbulence in the macros, and that's going to weigh on cattle at times. But like I say, we just went through one of those, so we should maybe have some free sailing here for a little bit to capture some of that premium back. I don't think demand's off that much yet. So
No doubt. We've held up pretty darn well here with all the macroeconomic concerns in the backdrop. All right. Thanks so much for joining me this morning, Kevin Duling with KD Investors. That's Markets Now.